the Moneyweb Crypto Podcast, where we discuss all things crypto related. Your host, Kieran Ryan.
More and more crypto traders are turning to AI to give them a jump on the market. But what happens when AI goes rogue and gives you completely wrong signals? The stats from online brokers show nearly 80% of traders lose money, and even those using quant strategies are prone to losses. Many believed AI would help them over this hump, but the research here is less than encouraging. It turns out that AI hallucinations are all too common. Well, someone who's been looking into this is Abhishek Saxena, who is head of strategy and growth at a company called Sentient. We'll find out more about that in a minute. But he's been looking into this issue of AI as a tool for trading and general reasoning. Hi, Abhishek. Thanks for joining us and giving us your time. Give us some background here. How are traders using AI to improve their performance? And I guess more crucially, is it working?
Kiran, thank you. Thanks for having me. And AI has been used across different knowledge work to improve productivity. And traders are using AI as well. The big difference between a lot of different other knowledge work and traders is that small mistake can cost you a lot of money. So then it comes down to accuracy and factuality of the answers that AI provides. Right now, traders use it in multiple ways. Majority of the traders still use it to build up the strategies that they will use. In the sense, leveraging AI for research, leveraging AI for building these strategies, then manually backtesting it, and then deploying them. And now there are more experiments where AI trades on the trader's behalf as well. Again, the former has been more successful. The latter has its issues, as you talked about, hallucinations, and hallucinations is not the only issue. We can we can go further into multiple issues that create in fully autonomous trading. But to your answer on how traders are using it, they're using it on both front, fully autonomous and just to get a lot of research out and building their strategies.
All right, so let's talk about hallucinations. I mean, it seems that a lot of the AI engines are steering traders in the wrong direction, and that's probably because of the data that they're using. What's going on here? What kind of hallucinations have you seen?
Yes. So let's get more technical on how it works, right? Like you typically give a prompt to an LLM who has access to certain data and certain tools. With the LLM injects this prompt, reasons out what kind of data it has to get, what kind of tools it has to call, and eventually once they get all the data back, they compile it into an answer and a strategy. There are kind of two major issues that we face here. First issue is hallucination, because when LLM is building a strategy, it is reasoning a lot, it's thinking a lot. And in that, sometimes there is context rot, which means it forgets the context that it was provided in the back. That's a problem that LLMs are facing. And sometimes it just makes up like pure hallucination. It just makes up stuff. And those are incorporated as facts into their analysis, and they get bad outcomes. So one is like this context rot and hallucination that creates an issue. But the bigger issue actually is data and tool calling. Majority of the time, your LLM will not have access to real-time data, or they are not calling the right tools to get that data to do the analysis, or they are not incorporating all kinds of data in their analysis. They forget something about macro, they forget something about just general fundamentals, and eventually you get a bad outcome. So you have to fix two things. You have to fix the reasoning aspect of it so that the hallucinations are less, context rot is less, and then you have to fix the data that the LLM is getting.
Okay, now trading desks and crypto platforms as well, they're wiring in what is called engagement optimized black boxes into financial infrastructure. And there's no way to verify the output there. So maybe explain what this is. This is something that people are probably not aware of, but it's something that has got significant outcomes, good or bad. What are we talking about here? Engagement optimized black boxes.
Yes. So it all depends on how LLMs operate and So there was this quote by Ray Dalio. It says, an accurate understanding of reality is essential for great outcomes. And that's true for LLMs as well. When you're just using an LLM, all of these hallucination, context rot also happens with just a bias of the LLM to go with the biases of the user. Like if you've used ChatGPT, like it'll eventually tend to agree with you and not give you the truth because it has to keep the user happy. So that is where these engagement optimize means to keep the user happy. It might give you outcome that might not be actual reality. And obviously the issue of context rot and hallucinations exist. And that's where it's failing. You need an LLM that is harsh and gives you the truth no matter how your prompt is layered. So that's what we are doing, like with some of our agents as well. We are making sure that they have access to all data pipeline. We have additional prompts to check that they're calling the right tools to get all of this data. And we also extract intent from the prompt that a trader would have sent so that the intent is not biased towards making the user happy rather than giving the user truth. So like all of this to some extent can be solvable. It has to be a deliberate effort that is done above the LLM itself, like over and like a framework layer above the LLM to solve all of these problems. But as of now, if you just give an LLM a prompt, you'll probably get an engagement optimized answer with a bunch of context, bunch of hallucinations, and this LLM trying to agree with your bias and you putting a wrong trade.
That is interesting. So the AI engines are there to keep you happy. So they'll tell you whatever it is you want to hear, even if you're going to lose money. Now, given all this, is there any advantage for traders in using AI? For example, Alpha Arena, they hold regular trading contests, and they basically give the same set of prompts to all the different AI engines. And so far, most of them lose. So they're given these rules, but they have wide discretion as to what instruments they can trade and when. It's a little bit disconcerting that AI has performed so poorly in trading, and I have come across some algorithmic bots that do quite well, but bots will work for a period and then they will fall over and they will start to lose money. So I don't know if we solved this problem yet. What do you think?
I would say you're right. It's not 100% solved. But at the same time, I would say it is constantly improving. Like this is a big piece of AI reasoning on building these quantitative strategy. As AI, the reasoning aspect of AI improves, this tend to improve. And as we are finding different ways to correct factuality, makes hallucinations are limited, this will improve. Would I say it is there yet? No. Would I say a much stronger system with checks and balances on these AI output as they are reasoning through their answers can solve this problem in the near future? Potentially, yes. These are quantitative problems. We have a bunch of historical data. If you have access to the right data, if you basically check multiple paths of reasoning and check where the LLM is losing factuality and cut that path off, there is a high probability of improving those answers. But right now, if you're a trader, I would caution you to just like give all your money to not give all your money to an AI LLM and trade for them. Rather use them as a tool. Build more complex prompt. Find more tools where it gets access to, let's say find an MPC to get access to the Bloomberg terminal. And then they have more data to play with. So if you are a trader right now, I would rather use it on the research aspect of it and then have a human in the loop to check that research. And accordingly, according to the research, build out the strategy and then use your own trading system rather than fully thinking that LLM will just trade for me. At the end, alpha is still what humans would generate. LLMs can help you get there. I won't think like LLMs right now will automatically generate the best alpha for you and gives you the best outcome. But we are getting there slowly but surely.
Okay, so tell us a bit about your company, Sentient, and I see you're involved in this kind of research. You also have a cryptocurrency. I think you're about to launch pretty soon. Tell us about that, and Are you trying to solve this problem of getting consistently successful trades going using AI models?
Yes, so Sentient as an AI org, while we do have a cryptocurrency, most of our product are AI, all of our research is AI. We are focusing on AI reasoning. Reasoning is anything an LLM does that is out of their distribution. Distribution is whatever was in their training data. So anything that LLM does that is not in their training data is considered reasoning. We are optimizing for reasoning. A big use case for reasoning would be finance, and trading is a big part of it. We have done deep research on it. We tried, and this research is essentially figuring out what are the flaws and how to fix them. And our recent research came out with this framework called Sera, which fixes all of those flaws, which fixes the flaw of like your prompt, where the right intent is extracted out, so it's not just making you happy. Which fixes the problem of, and this prompt like decomposes your query into smaller search queries or smaller tasks that needs to be done and executes them atomically. Second, we are solving the problem of data, where we make sure all of this data and the right context is provided to the model. Like in crypto, a big issue is your LLM will take your ticker and think it's a different currency and analyze a completely different currency and give you long and short. That like even things like that are not solved, right? So we looked at where all LLM goes wrong in terms of getting the data, analyzing that data, as well as understanding the prompt. We try to solve those issues and then give you an output. And this output, we would still say, should have some kind of human in the loop for final execution who understand how LLM has reasoned, where the data is from, and if the human agrees with the analysis, then the trade is placed. So that is where we are right now. As we get more human feedback on the final outputs from this LLM, we would be able to optimize this framework more. And hopefully, we'll be at a place where, Kiran, you have like 5 bots trading different conservative and aggressive strategies for you all day long.
Right. I guess we are a long way away from where many people thought we would be at the birth of AI. What AI can do pretty well is execution. What is not so good is the reasoning part. And you still need, and for the foreseeable future, still going to need a human to basically double check. I guess it's the same, you know, what we do. If you're using AI for any kind of research, you do have to check the source documents.
Yes, I would agree. In the current present, you would need a human in the loop. However, I would also say we often underestimate what we can do in a week. So, overestimate what we can do in a week and underestimate what we can do in a decade. And I think that will hold true for AI as well. So, eventually, as this AI reasoning becomes even more stronger, more accurate, very low hallucinations, very low loss of factuality or context rot, then it will all depend on essentially how good your prompt is, because all of the engines are actually very good in containing out and generating these outcomes. And then a difference between a very good trader who trading autonomous AI and an average trader would be just how much, and assuming everyone has, like every AI engine has the data access, would be just your prompt. And eventually I do hope that human in the loop will go away, but for now I would suggest a little bit of human in the loop would be the right caution to put in.
All right. And just as a final wrap up here, Abhishek, are you interested as a company in developing trading engines using AI, or is this part of a broader approach to, you said, finances is your larger view, trading being a part of that? Where's the company going?
Yes, so our research focuses on reasoning. Creating good trading outcomes, financial outcomes via reasoning is a part of it. So we'll have frameworks that people can use to create good research and in out kind of executable outcomes. These frameworks, we won't build a trading engine on top necessarily. We'll probably have some demos, but like very extensive trading engines that like big market makers or an HFT fund would have, we won't build that, but they can use our AI in the background to generate output, which right now can be checked by a human, but eventually could be autonomous, that feeds directly into their trading data or trading engine.
Okay, so the challenges are still there. AI still got a bit of work to do, but an interesting future nonetheless. We're going to leave it there. That was Abhishek Saxena, who is Head of Strategy and Growth at Sentient. Thanks very much for joining us, Abhishek.
Thank you for having me, Grant.
Thanks for listening to the Moneyweb Crypto Podcast, hosted by Kieran Ryan. To listen to our other podcasts, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates.